Hey guys, welcome back to the After Hours. I'm the Eight-Tailed Beast, and today we're going to talk about timing in the market. So let's get right into it. So timing is everything in the market, in most things in life. So the best time to invest is always yesterday. If we look at the history, it can help us invest in the right direction today. So everyone's having a rough time in their market, and this is worldwide. And we're talking about worldwide inflation and shortages. No matter where you go, you see headlines flipping back and forth. Peak inflation. We're heading towards a recession. Stocks are going up. Professionals see a long-term depression in your near future. It's like an emotional roller coaster. Countries are wishing they spent more on their domestic growth instead of their foreign policy. At this point, the world is connected and we're going down together. Signs are pointing towards a recession, if we're not already in one. Some of those signs look like their governments changing definition or trying to rewrite history. Other signs look like countries dipping into their emergency funds so they can counter the impact of high food and energy prices. At this point, there is no backup. A lot of people are looking to America for a bailout program or assistance. There's more and more changes as time goes on, and some of these changes are getting really ridiculous. One of them is the Federal Reserve. A lot of these definitions and titles on the bills are being rewritten to fit the narrative. And the narrative right now is everything's fine. There's nothing going on. Inflation doesn't exist. Everything's under control. They started changing definitions all the way back with the Gold Reserve Act of 1934, where this bill was used to confiscate the gold from all private lenders and put it into the government's reserve. People were saying it was literally a confiscation by the government of gold, and a lot of them weren't even redeemed in US dollars. Now this is back when the US dollar was backed by gold, before we switched to oil. In more recent news, you have Biden's Build Back Better plan being revised and renamed into the Inflation Reduction Act that wasn't approved by most people. So this means we have another $750 billion spread over the next 10 years put into healthcare, climate change, and prescription drugs. Speaking of drugs, did you know there's a shortage on Adderall? What? Yes, I'm talking about the focus drug. Check out the CEO of Patagonia. This is an outdoor clothing company. The CEO was forced to restructure his company. And when he restructured his company, he tried his best to frame the restructuring in a way that fit his company the best. What he said is he sold the entire company to fight climate change. Talk about rewriting to change the narrative. Just a day later, you find out that there was a $700 million tax, and they had to restructure the company where the family stays into power, and it was something that had to be done no matter what. And so they tried to rewrite the narrative by saying he did it for climate change, and this was a way for him to avoid paying a hefty tax. Now he can get paid by the salary, but most of the ownership is not in his hands anymore, but it's within the family's control, which is fine. You can't really blame him for that. Here's the FedEx CEO. He says he expects a worldwide recession. In FedEx, they missed all their earnings estimates, and they said the company had to withdraw their guidance and expected numbers for the year. So Jamie Dimon, the CEO of JP Morgan Bank, he warns that the recession is the least of our worries. There's actually something worse to come. When he said something worse was going to happen, I didn't know if he meant an angry Fed or a depression, because I think there's a drug for that. Now, who's the one that declares this stuff? Is it the Fed? The largest firms in the market? Maybe the president? Leave me a comment below on who you think is going to signal the avalanche in the stock market. And that's where we come back to timing. Now, the last time the market crashed, it was near the winter. If the market is a self-fulfilling prophecy and the past doesn't repeat, but it rhymes, we should pay attention to the October effect. Now, this refers to the psychological anticipation of crashes or declines because previous stock market crashes, like the crashes of 1907, 1929, 1987, and 2022. Oh wait, too soon. You know, to the day traders, the stock market is a phoenix. It's bound to die, and there's beauty in how short-lived those spikes are. And if you time it just right, you can make some money. What I'm trying to say is the market is fragile during this time, so you don't want to make any big sudden moves. Look how careful the Congress are being. They're being so careful that they won't vote to ban stock trading in the Congress until after midterm elections. That's also in October. I guess Nancy Pelosi wanted to put on at least a few more trades. Damn! It just feels like there's going to be a big change in October. So check out this video of Biden celebrating the signing of the Inflation Reduction Act.
Listening there to President Biden at the White House, he's celebrating the passage of the Inflation Reduction Act. He says that he's been fighting Big Pharma for decades.
I don't believe you.
But there is this unfortunate split screen right now with the Dow taking a total beating, down more than 1,200 points, and so it feels like it's hard to be celebratory for some people in the crowd.
Yeah, this is the day on which the White House celebrates the Inflation Reduction Act, when we get a new report that shows that inflation is still especially high.
Hi there, everyone. It's just 2 minutes after 4 o'clock. We are.
Okay, so you had CNN forced to cut the coverage of Biden's Inflation Reduction Act because the market was going down way too fast. And it kind of seemed counterintuitive. Now, when it came to Biden's timing of the celebration, I would think if you wanted to survive inflation and a potential stock market crash, you'd wait till after the October effect. Now, we see all kinds of signs that the recession is bad and inflation is still here. But if we look at the past, maybe we can have a little more insight into if we're actually about to fall off the cliff. So let's look in the past. We're going to look at the subprime mortgage crisis of 2008. And what we're looking for is a symbol or a defining moment from that time that signaled the start of the Depression. And that was hands down the bankruptcy of the Lehman Brothers. Their position was so heavy in the subprime market, it would crash it. Big business, when it falls, it kills the market, and the market is alive. And I think it's a bird. To the Fed, it's the goose that lays golden eggs. So the Lehman Brothers, they were the fourth largest investment bank in the US. Now the central bank, it normally would bail out a company if they can afford the collateral. But the Lehman Brothers, after the pending credit downgrade, they wouldn't be able to afford that collateral, or at least that's what they said. The central bank rallied other banks to help restructure the company so that it didn't affect the subprime market as much. Let's talk about day trading. If you are a day trader, you're an individual hedge fund, but you train like an individual Olympic sport. You try your best with a touch of humility. Now, you celebrate at the end, or you run the risk of shooting yourself in the foot. There's an Olympic rule you can apply when you're working hard towards your dream goal. Now, it's called the rule of thirds. 1/3 of the time, you're gonna feel okay. 1/3 of the time, you're gonna feel crappy. Another third of the time, you're gonna feel good. If you fall out of this ratio, you're fatiguing, or you're not pushing yourself. Good days, they build your confidence. Bad days, they build your patience, your courage, and resilience. Looking into the market is like looking into the darkness. You don't really know it's there, but you can imagine it. It stares back at you. If you see the eye of the market, you will see obsession with a touch of madness. Now, without that touch of madness, you will never be able to use the past well enough. Use the trauma, use the force. All interactions in the market are a part of the weeding process, because remember, 90% of people lose in the market. That means less than 10% win. Game recognized game. All right, guys, that's all I got for now. If you like the content, let me know by hitting that thumbs up, and I'll catch you guys next time right here in the After Hours. Peace.